We're going to have four people here. One will be the chairman for the second session. Two of them they're going to be our discussant of this particular subject. And our main speaker is also joining us up there. Our chairman is a Gambian by birth and also nationality. He started his insurance career in 1980 with the Gambian National Insurance Corporation, rose through the ranks to become its first deputy managing director and also deputy chief executive officer in 1994, and later in 1998 was appointed its managing director and CEO, which position he held until he left the service of the institution in 2005. Appointed to his current position as Secretary General and Chief Executive Officer of the West African Insurance Company Association, a sub-regional body of insurance institution in West Africa, and the parent organization of the West African Insurance Institute in the Gambia, and also the Reinsurance Corporation Incorporated in Freetown, Sierra Leone, which he was instrumental in setting up. Ladies and gentlemen, please let's welcome our chairman, Mr. William Coker. Our discussions, two of them. The first one, he worked with the National Insurance Commission for 17 years. He has been the head of the supervision since January 2006. Prior to joining the National Insurance Commission, he worked for them 3 years with KPMG. He's been involved in a number of projects to develop the insurance market and improve access to insurance in Ghana. He has actively been involved in the design and implementation of a risk-based supervisory framework for the Ghanaian insurance industry. He's also played a leading role in design and implementation of Ghana's micro-insurance regime. He has been a director of the Ghana Insurance College since its inception. He is also a program leader of the Toronto Leadership Center in Canada. He's married and blessed with 3 kids. Ladies and gentlemen, our first discussant, Michael Kofi Annan. Please let's round together for him. Our final discussant holds a master's degree in population studies and a bachelor's degree in economics and statistics from the University of Ghana, Legon, as well as a diploma distinction in insurance from the West African Insurance Institute. He's a fellow of the Chartered Insurance Institute of the United Kingdom. He's also a member of the Ghana Bar Association, and he joined Ghana Reinsurance Company in January 1994 to start the Research and Statistics Department. He served in several capacities, head of the research manager, technical, and also deputy managing director and secretary to the board of directors. He became the managing director of Ghana Reinsurance Company in January 2012 and retired in June 2016. Before joining Ghana Reinsurance Company, he worked with the State Insurance Company, now SIC Insurance Company. He attended several seminars and conferences in insurance in Africa, Europe, and also in Asia. He is an executive council member of the Insurance Institute of Ghana and the second vice president of the Ghana Insurance Association. He served as the chairman of the academic board and council member of the Ghana Insurance College, and he is a member of the advisory board of the College of Health Science. Ladies and gentlemen, out there discussing Mr. Gustavo Kwesi Saleh. Okay. The theme, as I said earlier, is transforming the general insurance industry through self-regulation and financial capacity. Before I hand over to the chairman, the two of them will have 20 minutes each for the presentation, then 20 minutes for the opening forum. But please, if you know there's an MC seat in front of you, kindly just move forward. Just take your kingly and queenly role by just moving forward. Thank you very much. Now over to the chairman, Mr. Koga.
Thank you very much, Mr. Moderator. Ladies and gentlemen, my task here since this morning, just to make sure that there is peace in the room, since we are discussing issues and there'll be varying points of view. We have had Stephen give us the East African experience. Now we are going to see how two members of the West African industry will dissect what Stephen has said, bring out the points, giving us their own perspective as well from West Africa, and making recommendations to us for our use out here. The minister has said that there is this local content law. I am looking forward to the situation where they will tell us how we're going to leverage on self-regulation to take advantage of that, the new law. I'm also looking at a situation where they will tell us, or justify, if I may use that word, why the need for self-regulation. Is it just for the sake of self-regulation because everybody is doing it, so we will also go ahead and do it? Or there are pros and cons? I'm looking forward to that. Same thing with financial. It has been said that the session is divided into two, so our session here will only deal with innovation. We'll only deal with self-regulation and financial capacity. The two discussants come with some unique background and characteristics. The first discussant is the commissioner. Well, deputy commissioner de facto. For you practitioners, and indeed for myself, you better listen well. Secondly, he is going to make some subtle suggestions here and there. If you're smart enough, you'll pick those suggestions up. And then when you want something from NIC, put those suggestions as part of your proposal to him. And then he cannot refuse it because he said it will be there. So please listen carefully to him. He is the commissioner. So he's coming with a lot of, power and vim. The other discussant comes with a lot of experience. I'm telling you, you better listen. Because if you don't listen, you will still have to learn the lesson. But you will learn it in the hard way. So please listen to him as he shares his experience with us. On that note, ladies and gentlemen, I'll call on the first discussant to make his presentation. Thank you. Mr. Kofi Ando.
Honorable guest speaker, the very loaded, insightful, interesting made to us by Honorable guest speaker. His topic was transforming the general insurance and business innovation. So there are three tools here: financial capacity, would focus mainly on financial capacity. commensurate with the nature and the level of risks inherent in the kind of business that they are doing. When you are exposed to losses, when the risk is there, and the risks are everywhere, okay, when you are exposed to, there are two things you can do. You can either manage the risk so as to minimize the probability of them occurring, or you can hold capital to absorb the losses when they occur. So earlier on, we talked about overcapitalization. One way to avoid or minimize overcapitalization is to do a very good risk management to minimize the probability of losses so that we reduce the amount of capital we need to hold. Because once you increase your risk profile, you have to hold more capital to absorb the expected, and that is indeed how the Ghanaian risk-based proprietary framework is designed. As your risk profile increases, the amount of capital you need to hold increases. And so we need to pay attention to risk management. Now, we are talking about risk and linking it to capital. Risk surrounds us. Risk is in our environment, and risk is in the kind of activities that we engage in. They are everywhere, and so we need to be very cognizant of them and react to them in a way that will favor us. A year or a little more ago, a number of insurance companies lost a lot of deposits placed with microfinance institutions. Some of them very huge. Some have managed to recognize the impairment, that is accounting language. But some have written off those money they have lost through the microfinance institutions. Others are still keeping them. The fact is that they have lost those monies. That is credit risk when your counterparty is unable to pay back what you have given. And so that is a very real risk that is with us, and we need to be aware of and actually take steps to manage them. A few years ago, we had some massive dips in our stock exchange prices. And so the company that was heavy on listed equities had to take a lot of losses on their balance sheet. These are real risks that in the environment and there was some depreciation of the cedi, and then we have issues about safety standards, which constitute risk to us as insurers. We have been talking about accident rates, we have been talking about gas station explosions, which are becoming more and more rampant, fires, floods. 2015, we had one of the very worst floods in the industry, paid so much, road accidents which are on the increase. These are all risks that are in the environment and our activities that we need to do something about, because they expose us to losses. Those risks, if we don't manage them, expose us to losses. And so we need to be. If you study the financial statement of most insurance companies, we are making underwriting losses. It means we have insurance risks which we are not properly managing. And then we have operational risks. Some of us were some due to human weaknesses. Some of us have incurred very huge financial claims, bonds, and that have also become big issues. Some companies, if the full recognition of those liabilities are made, there will be serious issues. These are real risks in our weak IT systems and high operational costs. Our expense ratios are very, very high. Now, all these things I'm talking about expose us to losses. And so these are risks that we need to talk about. And that is why I'm just trying to buttress the point made by the speaker about linking risk to capital. We need to be risk-based when we are talking about capital, so that we can properly
Now, I will, he talked about risk-based capital. I will briefly talk about risk-based supervision the way it's been done in Ghana so far, which will actually encompass risk-based capital as well. And he told us a lot about how the Kenyans have gone about doing some of these things. I will briefly tell you about what has gone on here, what is about to happen, and the discussions that we will be having in subsequent days. So the National Insurance Commission decided in 2011, 2012 to go risk-based in its supervisory methodology. Two main reasons: one, to enable the authority to allocate resources more efficiently, and second, to enable the insurance companies to have adequate capital commensurate to the level of risk that they are taking on for their businesses. We've been working on this for some time. I'll come to a point where we have engaged later on, but where we are is that we have come up with certain guidance document to guide the industry, to manage expectations, to build capacity. We have released the supervisory framework, which describes how the NIC will go about doing risk-based supervision, mainly how we will risk categorize, assess risks, and then we've come out with the intervention guide, which shows when the NIC will intervene and how they will intervene, depending on what the circumstances are. The speaker touched briefly on that when he talked about our solvency control level. So depending on where you are, there are certain actions that the NIC might take. And then we have come out to the corporate governance and risk management framework, which lays out the NIC's expectations on the procedures, the processes, the structures that we expect the companies to use to manage the risks that I talked about earlier on. So that's in the corporate governance and the risk management framework. We have also released the risk-based capital adequacy framework, which, apart from laying out the capital adequacy requirement, also requires insurance companies to use scientific methodologies to calculate their technical provisions and to prepare what we call the financial condition report. I'll talk briefly about financial condition report later on. But the capital adequacy framework is not much different from what our speaker talked about. We have the available capital, which is how much capital the company actually has. This is mainly the net asset, the equity, less the inadmissible asset, divided by the capital requirement. That is how much capital you are required to hold, depending on some factors. So when you divide available capital by the capital requirement, you get your capital adequacy ratio, which in our case must be at least 150%. He did say that in their case it must be 200, but they are trying to adjust it. The thing about our solvency capital requirement is that it is not risk-based as at now. Our available capital is risk-based. Our solvency capital requirement is not risk-based. And so there is work currently ongoing to make it risk-based. There will be engagement with you. The NIC is looking forward to getting a steering committee made up of all the relevant stakeholders, the accountants, the actuaries, of course you, the industry, and all the relevant stakeholders, so that we go through the relevant risk factors or risk charges that have been worked on, do the relevant impact assessment so that we can improve upon it. Currently, the solvency capital requirement is based on volume or expenses or an absolute minimum, which is not risk-based. As the speaker mentioned, the solvency capital requirement should be based on risks. He categorized them into four And I think that is the same way that we are going to the insurance risk, the market risk, the credit risk, and operational risk. So the summation of these risks will give you, there are risk charges for the various aspects of these risks that I've talked about, and when they are summed up, it tells you how much capital you should hold based on the level of risks that you have. Now, the NIC has been aware that you cannot just issue guidelines and laws and regulations and expect everybody to comply. So the NIC has tried to walk along with the industry right from the beginning. I remember at the GIA executive retreat in Akosombo some years ago, we were there to explain what risk-based supervision was all about. We hadn't started the journey yet. We wanted to work with the industry right from the beginning. So we shared what it's going to be about, how it will impact on the industry, and the things that the industry needs to do to prepare for this. Now, I talked about some documents that we have issued, the framework, the intervention guide, the capital adequacy framework. We had extensive consultations with the industry before releasing each of these documents. We had a lot of suggestions and contributions. Indeed, at some point just before we released what we had, some companies thought that we should hold on and have a fully risk-based capital requirement before we start. But I think the consensus was that let's start from step one and run it for a couple of years, then we could update it and improve it to fully risk-based as phase 2. And so that is what it has been. The NIC has also made effort to build capacity for the industry. From the board to the executive to the control functions, the NIC has organized seminars and other platforms to build the capacity of the industry to be able to handle. As the speaker said, this could get very technical at some point. You are talking about risk management, you are talking about solvency, risk-based capital, and this could get very technical. And the board is supposed to be in charge at the steering wheel, and so it is important that they get to understand generally what this means and what it involves. So the NIC started with the board and did some capacity building for the board. This has been cascaded down to the executive and the control function. There are a few more that is still going to be done to see to it. There have been challenges. There's still lack of capacity. Risk-based supervision needs a lot of expertise. We need actuarial expertise. We need accountants who understand IFRS and how to do proper financial reporting. We need auditors who understand the issues and are able to validate the figures. We as regulators are supposed to use the validated figures to make our analysis and decisions. It is not our responsibility to validate the figures. But we need to be sure that those whose responsibility it is to validate the figures have the expertise. And so we have some challenges there. The other challenge is that we have companies that I may say are too small and therefore are unable they have low retentions, unable to pay claims, probably loss making, unable because they don't have the resources to manage the risks that should be managed. And so these are real challenges that we need to talk about in the next few days. And so, as I said, we will engage you. Now, going forward, what is going to happen? Anytime soon, the NIC will start to communicate risk ratings to the various companies. What risk-based supervision basically does is that it risk profiles each company. So you may be high risk or low risk or medium risk or whatever it is. And depending on your risk rating, there are things that the NIC is going to ask you to do. And so very soon we'll start communicating risk ratings to the company and why they have those risk ratings, and it will be up to them to work to address the issue. Additional work needs to be done, and yes, they are being done. We need to do capacity building for our accountants and auditors, and the NIC is in collaboration with the ICA. A few weeks ago, we had a forum with the external auditors at the NIC. It was a very interesting one. Of course, we did have the CFOs there as well, and so it was a very interesting conversation. We realized that there were a lot of things that we need to work on. Indeed, the guest speaker did mention that 2 big IFRSs are coming, which are going to impact very heavily on us as insurers, IFRS 9 and IFRS 17. IFRS 17 is going to change the structure of our financial statement very significantly. So it's going to change the way we do business. It's going to change the way we see the figures that we look at every day. And we need to build capacity for our auditors, for our accountants, and for us, for everybody, because we need to understand the impact of the figures we push into the system on solvency and everything. So we need to engage with the ICA and you on the IFRSs that are on their way. We are doing some work on actuarial expertise, which we hope to continue, and risk management as well. The other thing we need to talk about is capitalization, maybe to consolidate small businesses which don't tend to be efficient, because there are companies that are spending as much as 80-90% of their premiums on expenses. How are we going to provide for the claims that we are going to meet in the near future? So capitalization is an issue that we still need to talk about. Thank you. We need to make our solvency capital requirement fully risk-based, and I've already talked about that. We will. We need to pay a bit more attention to the report I mentioned earlier on, the financial condition report. If we want to build financial capacity, this is one tool that will help us to do it, because as the name suggests, this is a report on the financial condition of the company. In fact, this report is meant for the board. Our regulation just said that a copy must be submitted to the NIC, but this report is for the attention of the board. It's supposed to tell the board about the financial condition of the company, and the report is supposed to have some projections of your balance sheet and your revenues and your solvency. Is supposed to have some stress testing, that if this and that happened, how will it impact on our financial capacity? So indeed, it's time to begin to pay some attention to some of these things, and I hope that we will be able to do that. I have just a few more minutes and I have to round up, so I had a few things about okay. I had a few things about self-regulation that I wanted to talk about very briefly, but okay, so some avenues that we can talk about. Self-regulation is important, and all over the world it comes to actually complement and supplement the regulation that is done by the authority, and it makes things work. We should also begin to see self-regulation as a tool to enhance value for the customers, to get into the competition. As our speaker mentioned, entities that we're probably not looking at our real competitors now, because as he said, our competitors are not the other insurance companies. There are other entities who are beginning to get into our space, and we must begin to look at how we can use some of these things to, we can use self-regulation to look at how we deal with complaint so that we keep the customers satisfied, we keep them informed about their issues and their grievances, about our product pricing. We can have self-regulatory measures to make sure that we have our motor tariffs that we agreed upon, that we are all abiding by them, so that somehow we get to manage our insurance risks, our no premium, no cover. Elsewhere, the registration and supervision of agents are done by insurance companies and not the regulators. Maybe we could look at that. In some jurisdictions where risk-based capital is advanced, for the capital requirement, they allow companies to have internal models for determining how much capital they need to hold to support their business. So as a company, you could develop your own internal model for calculating your capital requirement. And I think that it is a good self-regulatory measure if the appropriate resources and measures are there to validate them and ensure that they work. I've run out of time, and so I have to stop here. Thank you.
Thank you very much. Let's give him a round of applause. Thank you very much, Mr. Deputy Commissioner. See, I told you he's the regulator, so his only interest in this topic of self-regulation is to make sure you do the work before he gets you to do the work. So that's why he has, in a subtle way, told you what they are planning to do. So the expectation is that you will start to self-regulate along those lines so that when he comes to check, all is well. That's the whole essence of self-regulation. He's given us the relationship between risk-based capital and finding the right balance between risk and capital. I mean, what the NIC is doing, having or have done, giving guidance, documents, and a framework, solvency ratio. They have not started it yet, but it is coming. So why don't you start building capacity in this area, so that when he comes, life is easy for everybody. There are certain issues they're grappling with. And that is to deal with how they handle smaller companies, and certainly risk rating is on the way. So please, he has thrown certain hints. Like I said, we did not discuss when he was going to, what he was going to say, but I knew where he was going to go. So you are well advised. A word to the wise, they say it's in the north. We will now ask our second discussant, Mr. Gustav Siale, to give us his presentation. Let's welcome him, please.
Mr. Chairman, our guest speaker, the President and her lieutenants of GIA, Chief Executive Officers of insurance companies, distinguished ladies and gentlemen. First and foremost, before I say anything, I want to thank you so much, the planners of this, for inviting me to come out of my retirement to stand before you. I would like to first and foremost congratulate my brother. He is my brother. We know ourselves for several years. I'm talking about Mr. Steve Oloch, for an excellent paper that he has delivered. He was very detailed and very thorough in the treatment of the topic. In actual fact, he identified self-regulation, what it should be targeted at. He also talked about who should drive this self-regulation, the advantages of self-regulation, he enumerated them, the potential benefits that we should expect from self-regulation, well documented in the paper. He gave us also the experience of the Association of Kenyan Insurance. Then eventually he ended by giving us an indication of the steps that the Ghanaian market should take. So seriously speaking, all the things that I would have to say, he had said all of them. So I am not going to attempt to repeat those things. But he asked a poignant question at the very beginning of his presentation, and I think that is very key. He asked the question, is the Ghanaian market dying? Is it surviving? Or is thriving? The answer to that question is very key as far as self-regulation is concerned. I must say that over the years, the general insurance industry has made a lot of progress. So one would not say that it is dying. One would also not say that it is surviving. But we are making progress to thrive. Some of the things that the Ghana insurance, the general insurance industry, the strides that they made in the past include the setting up, for example, of the oil and gas pool. Oil and gas pool is an industry collaboration which we brought together, the GIA brought together to address one of the key issues that we are talking about here, that is the financial capacity of our companies. Over the years also, GIA, which is the main driver or expected to be the main driver of this self-regulation, has also tinkered with the introduction of agric insurance. That agric insurance is not going too well, but it is hopeful that with self-regulation and collaboration, there is bound to be a success in that field as well. One of the things that they've used effectively, which we will be talking about, is how they were able to collect the outstanding membership dues. They have achieved all these and introduced a newsletter as well. When you look at this achievement of the general insurance industry vis-a-vis what AKI has done, we have a lot to learn from them. I must say that although the general insurance industry has made some progress, there are still some teething challenges that I would want us to look at. The first one is the lack of intercompany cooperation. There is not much cooperation amongst us as companies. This becomes very evident, I always say, when you travel outside on conferences, you see the East Africans vibrating together so well. The same cannot be said about the Ghanaians. There is a need for us, through self-regulation, to encourage intercompany cooperation. There is this perennial problem or serious problem of undercutting of agreed tariffs. I think he has alluded to that. This practice must be met headlong. We cannot agree to set rules or rates. Then we, the same people, would undercut them. So self-regulation must be directed at things which or actions of members which will give a wrong impression of the market to the insuring public. Then, of course, we also have the lack of commitment to the programs of the General Insurance Council. If you look at it very carefully, one of the steps that he said we need to take in this self-regulation as a market, he indicated that the various technical committees or work groups of GIA must be functioning, must work and work well. The experience from our side is that it has not been so. You set up these technical committees, they are not able to meet. So self-regulation demands that if we set up these technical committees and other work groups to work with us, then definitely they must be up and doing. It is very, very important. One other area which is very key, which we need to look at as far as self-regulation is concerned, has to do with lack of professionalism, expertise among practitioners. Our actions, the way we do business, must be looked at carefully. And GIA can drive this and create a situation where professionalism would take center stage. The one other thing which is becoming endemic in our industry, which also requires this self-regulation, has to do with lack of expertise. If you go into some of the companies and you talk to some of the people, some of our workers, you realize that the required expertise that is needed for the work is not there. What that means is that we will not be serving the public properly, and that will not create a very good image for our industry. So self-regulation must actually lead to healthy competition. So what we need to do as a market, GIA should do, is to ensure that measures are put in place where healthy competition is done and it's based on only service delivery and adequate. When we do that, what will happen is that adequate premium will be charged. Then we'll be able to discharge our obligation as far as claims payment is concerned. It's like a cycle. And then we'll be able to meet our claims and give good service, and the service that our clients expect from us is prompt settlement of genuine claims. So when claims are paid quickly, what it means is that the image of our industry will be enhanced. And this also is premised on the fact that we charge the appropriate premiums. That is why undercutting, we must all fight it and make sure that through all kinds of measures that we can put in place as far as self-regulation is concerned, this will be addressed. Now, one thing which is lacking, which he mentioned, is that AKI have put in place a framework, a self-regulation framework. I don't see that in the market yet, and it is a challenge for the GIA to make sure that we put in place a framework for self-regulation as quickly as we can. And for self-regulation to succeed in the general insurance industry in Ghana, professional standards and code of ethics must be put in place. One of the things which is very important is that if you institute a self-regulation, he alluded to it, institute a self-regulation, the majority of the market must support or sign on to that self-regulatory framework that has been put in place. thank God, thankfully, in our case, all insurance companies, general insurance companies, are expected to be members of GIA. That is why if GIA puts in place a framework, then of course all of them must buy into it. One thing which is a development on our market, which is also very good and which will help self-regulation for us to achieve the benefit or the benefits that self-regulation provides, has to do with a very good working relationship that exists between two very important stakeholders in our market, GIA and GIBA, the Ghana Insurance Brokers Association. The two of them, there is a good rapport. The brokers are out there also working on our behalf. So if we are crafting a framework, a self-regulation framework, it must apply to both those who are in the insurance companies as well as the brokers. Then of course, there is a professional arm of our market, which is the Insurance Institute of Ghana. They must also be brought on board. These three groups must work together in the creation of this framework so that we will be able to put in place a very good professional standard and code of ethics which would guide our operations in the market. But if you do all this, and he also mentioned that, if you do not monitor these standards and code of ethics that you put in place, then you will not achieve much. So monitoring is key. But you see, this framework, if you put it in place, it is not law. It's not like the Insurance Act, where if you sin against it, sanctions will be exacted or applied to you. It is a gentleman kind of agreement, and therefore, if sanctions are not sort of applied, then people may decide to flout it. So it's very important for us to put in place a mechanism, monitoring mechanism, and also to ensure success and abidance to our whatever framework we put in place. We must try to put in place some kind of sanctions. But you see here, what is very important is that the sanctions that you have to put in place must be swaying more than what the commission will do. But I know that GIA is capable of doing this, because for a long time we had a lot of backlog of membership dues. But it is this swaying, moral swaying, that was used, and this outstanding dues have all been collected. If you apply the same swaying, moral swaying, I believe that whatever framework or code of ethics that we put in place will be achieved. Now I want to make some few comments on the transformation through financial capacity. I think this is very important, and Mr. Chairman, this has been addressed very well, and he talked about the issue of risk-based supervision and risk-based capital. Mr. Chairman, the Institute of Risk Management defines financial capacity as an organization's ability to absorb losses with its own funds or borrowed funds without major disruption to its operation. This is very crucial to us, because it is the one which will determine the retention of any company. And amongst we reinsurers, there is a rule of thumb that a company's retention should range between 1% and 5% of its stated capital and free reserve. As I said, Mr. Oloch has explained in detail how the RBS works and how RBC, the risk-based capital, also works. The movement away from this fixed capital regime is good news for all of us. Why do I say so? In every market, insurance market, we must have small companies, medium companies, and also the large ones. So prescribing a flat capital, one capital to be satisfied by the small players, the medium players, and the large players will not be helpful. What will happen is that there will be quite a lot of underutilized capital, as it was stated earlier. But the introduction of the risk-based supervision, therefore, brings the determination of capital required to the boardroom. Now it has become a business decision rather than a fiat from the regulator. So as a businessman, you have to decide the type of risk profile that you want to have. You have to decide also on your underwriting philosophy, or the philosophy of the company should drive, as it were, the capital that you require. So, for example, he mentioned, he has not been able to, I read the whole presentation, he stated that Kenya is second after South Africa in terms of risk-based supervision. But you see, the interesting thing is that in South Africa, their minimum stated capital for the general insurance industry is only 5 million rand. When you convert it, it comes to only below $400,000. That's how low it is to enter the market. What is important is that as you enter the market and you start writing business, assuming risk, then it will determine what level of capital that you need to do. And this risk-based capital, risk-based supervision would ensure that three things will happen to companies that are not able, who cannot meet their current capital. One, risk-based supervision will lead to a company deciding to raise additional capital through equity, or they will merge, as it has been stated earlier on, merge with another company, either voluntarily or by force, by the commission. Commission will ask them to find the money. It is important that we also manage our current capital through retention of profits over the years. It's very important. If you cannot raise the money by equity, it is important that when you make profit, you don't share it. You plow it back to build the needed financial muscle to be able to write a bigger account or bigger business or risk. A very good example of this third method is Ghana Reinsurance Company. We started with only 3 million cedis, but that company has grown the financial muscle and will be able to retain quite a lot of business. However, because the capital that you need is now shifted to the boardroom, a business decision, Ghana Re wants to raise additional money, additional capital, because the boardroom decision is that rights petroleum, oil and gas business, and you need higher capital to do so. Retain more business, and you need to do that. So additional financial capacity would also be provided by new entrants, and it is very important. Large companies will now come in. Either they will buy into our companies, or they will come to invest directly. When this happens, it will help the market. It will help the market to be transformed. It is very important. Additional money which is brought in, apart from the retention that financial capacity, adequate financial capacity can help us do, I think also that it will help us to invest in very key areas which will make the insurance industry, the general insurance industry to be transformed. It will determine if you have adequate capital. It will determine the level of investment in technology, level of investment in research and product development. It is the level of investment in these areas made available because of the capital that we have, the financial capital that we have, to transform our industry. So in conclusion, I want to say that with proper self-regulation framework put in place, coupled with available financial capacity, the general insurance industry in Ghana will not only be transformed, but in my humble view, it will be revolutionized. Thank you.
Thank you very much, Gustav. Thanks so much for sharing with us. Ladies and gentlemen, is the Ghana market dying, surviving, or thriving? Actually, they normally say the whole is made up of small parts. So the Ghana market is there, but the individual companies make up the Ghana market. So let's translate that. Is your company dying, surviving, or thriving? Because if it thrives, it translates into a thriving market. Yes, Gustav has said that there's a lot to learn from the Kenyan experience, and self-regulation will help if companies can meet, network, socialize. I'm talking about socialization or whatever. Just outside when we were having coffee, I was having a quick discussion with Kwame Ofori, and he's saying, "Hey, are you in this city?" I said, "Yes, we are here together." He said, "But we don't meet." He said, "Yes, we don't meet, and we are in this city, and they say Accra is small. We don't meet. Or we only meet in situations like this." So he says maybe the insurance industry should have some place where they call what? Insurance Social Club. And we go there, CEOs go there, like the police, the military, they have their mess. You go there, various categories of, and you meet and you network. And when you meet people more, the tendency is, I'm not sure you want to hurt them by taking their business. Because you know you'll meet them tomorrow in the social club. How do you look at them in the eye? So maybe that's something GIA should look at. Self-regulation, Gustav says, must engender trust in our profession. Let's regulate such that the guys outside, the consumers, trust us. Okay? GIA structures, they must function. You have committee this, committee that. Is it functioning? And it can only function if there's commitment. So I think that's something we should look at. We should build expertise through self-regulation. Don't wait for the commission to say that before you can be CEO, you must have ACII or you must have this or the other. Build internal structures. The framework for self-regulation, Kenya has it. Can we build one in Ghana? GIA, GIBA, CIIG. Let's work together. And certainly, there should be a monitoring mechanism. Maybe not punitive, but like he said, strong moral persuasion would help us. So once again, let's say thank you to Gustav by giving him a round of applause. Now I have 15 minutes to take questions. I'll take 3 questions at a time, and I'll stop when I know my 15 minutes is up. Please kindly raise your hand, tell me who you are, and state your question. If your question is directed at any of the persons here, please say so. Yes, I have a gentleman. Yes, sir, I see your hand. Who's doing the mic? Oh, there's a mic. Please, there's a mic in the middle. So just come forward and identify yourself and state your question or contribution.
My name is Olympio Peck. I'm representing the regional chairman of GPRT. My question is about fake stickers in the society or on our roads, in the transport sector. We have so much fake stickers from insurance companies. These stickers cannot come without the cooperation of the workers of the various insurance companies. And the innocent driver will be picked up on the road and they will go and lock them up. And we all know that all the drivers in this country are not, they haven't been to school. And the moment these guru boys cooperate with the workers of the insurance companies and give them the stickers and they put it on their vehicles, they'll be on the road somewhere around Choko or Mamprobi or somewhere. A police will stop them and they said, your insurance is not correct. And somebody who hasn't been to school before, he will not even know how to defend himself. And then they send him to court and throw behind bars. So we plead with the GIA. They can do investigations and know where this problem is coming from. Instead of the innocent driver on the road, which is being penalized every day and out. And they are not dealing with the big fish. The driver doesn't print the stickers. No. It is the cooperation of your workers or people in the industry that we see these fake stickers on our roads.
Okay, thank you so much. I think you've made a very good point there, very clearly too. We will give a response. Do we have another question or comment or? Yes, sir.
Maybe I do not qualify to try to answer, but my name is Ebenezer Niama. I'm the branch manager for Heritage Energy Insurance Corporation. I'm trying to answer this because recently, I think our president, the chairman of, or the president of the NIC just mentioned it. Recently, there has been an issue with IIC. I'm commenting on it because I happened to be at the police station when the gentleman was arrested. And then I think I even put it on my Facebook. The issue has gotten to NIC. Recently, they've even issued a statement on it. The truth, what our big man said, I agree. But we should also look at this. Most of our drivers also believe in cheap, or excuse me to say, reduced rates. Because this particular incident, the amount the gentleman was charging was 150 Ghana cedis. We are all here. Which of the insurance companies is selling insurance for 150 Ghana? So we should also look at that. Thank you very much.
Thank you. Yes, I recognize.
My name is Omoya Lawrence. I represent the Jensen Lane. I just want to share my experience with Nigeria market. Right now, Nigeria has a database where all the companies underwriting motor, they have to upload all their the details of their insured to that database. And it's being controlled by the Nigeria Insurance Association. So that one can help us to reduce all these fake certificates to the minimum. Thank you.
Thank you. I actually noted that here and was going to give that as a response. But since you have done so, maybe that's something GIA will have to collaborate with the Nigerian market and try to bring that, because it's a very good development in that market. I mean, the problem in Nigeria was much bigger than what we are experiencing in Ghana. I mean, and they have solved it. So we should be able to solve it here, certainly. So, you want to?
I think there was a decision of GIA regarding setting up the database, and I know that we are working on it. That would be, I believe, will be done soon. Thank you.
All right, I'll take last 2 questions. Time is not on our side. Last 2. I'm sorry I have to rush you, but...
Good afternoon, Mr. Chairman. My name is Kwabena Labi. I'm with Ghana Oil and Gas Insurance Pool. My question has to do with third-party recoveries in this industry. So I know that because of the fact that for every comprehensive or third-party claim, there is a need for you to get a police report. When you are going to make a claim with an insurance company on your third party, I mean, they ask you a question about, do you have a police report? If you don't have a police report, they put impediments in your way. So is there a way, like was being suggested, that all the companies in Ghana can come together to form like an SLA in a sort of like knock-to-knock manner, such that if I have a claim and the claimants agree that it's your fault and we go to the insurance company and there's agreement, the insurance companies can then go ahead to pay your claim without necessarily insisting that you have a police report? Because there's a lot of issues that companies collect the premium, and when it comes to third parties, they don't pay claims. Thank you.
Okay, last question before we try to answer what has been. Yes, I recognize. Why? I mean, I love ladies, oh. If you think I don't, you are making a mistake. So I'd like to have a question from a lady as my last question, please. The ladies add color. So some lady, please ask me a question. Thank you. Yes.
This is just to add color to it, because I see that you look color. But throughout this morning, we've been talking about self-regulation, and it's a great thing to talk about because it's something that is quite aspirational if we want to do it. But I've been thinking the whole morning, are we willing as an industry to do this? Because one of the things that we have had to do, and the Commission has helped us to do, was minimum rates. We are not even abiding by that. So how are we as an industry going to be able to self-regulate so that it is not just talk, but it is a reality? Thank you.
Please let us know who you are, kindly.
My name is Mabel Ananyakwa Povle. I'm the MD of NCI Insurance.
You are from NCI. Thank you so much. You see, she asked the most poignant question. See why I love ladies? I will ask Gustav to attempt it.
I think that that question is a very good question. And how do we ensure that we abide by our own decisions? I think first and foremost, that is why I talked about professionalism. And this professionalism must be at the level of the CEOs of our companies. And then, of course, there is the need for us, for the CEOs, also to be committed to whatever code of ethics that we put in place. And indeed, if you are a chief executive and you show a lot of professionalism and you own, and because you have agreed on this code of ethics and you agree to live by it, then of course what you are saying will not arise at all. Then they will have the moral authority to ensure that those who work under them would also comply. And as soon as we do that, that problem will be a thing of the past. But most of the time, it is sometimes the CEOs who give the instruction. So do this so we can increase our market share. Thank you.
Okay, I'll give Deputy Commissioner a word before we wrap up.
Well, I think that the question that was asked last for me is the most important question. How do we make sure that this doesn't remain just a talk? How do we walk that talk? how do we implement what we are talking about here? It requires individual decision as well as a collective decision. We must decide as an industry that this is what we want to do, and we really want to do it. We don't just want to talk about it in a conference room and go out there and continue business as usual. When our guest speaker was speaking, he said something that I noted down. He said, change or die. Thank you.
Well, ladies and gentlemen, change or die. We know we want self-regulation. We know why we want self-regulation. We know when we want self-regulation. The question now is, how do we go about self-regulation? That is what we have to answer, and answer with a very honest and sincere attitude. Ladies and gentlemen, thank you so much for your attention and giving us this opportunity to share with you. I hand over to the moderator. Thank you very much.
Thank you very much, Mr. President. Please put us together for this. GIA would like to show their appreciation to all of you, and we have a citation for you. So we'll mention your name, read a citation, then we'll call on someone to do the presentation for us. Nicolina will read it. Okay. All right, I'm going to read the first one. This is an appreciation of your brilliant and thought-provoking paper presented on the topic, Transforming the General Insurance Industry in Ghana through Self-Regulation, Financial Capacity, and Business Innovation at the first National General Insurance Conference 2017, this Thursday, October 19, 2017. Signed by the Chairman of General Insurance Council and the Second Vice President, and also the President of the General Insurance Council. And this citation goes to Stephen Oluji. And we ask Ms. Aretha to do this presentation for us. Yeah. You want to do it down? Okay. Let's put our hands together for them once they get down. The second one, this is an appreciation of the brilliant and able manner you chaired the first discussion session of the topic, Transforming the General Insurance Industry through Self-Regulation and Financial Capacity at the first National General Insurance Conference 2017. And I guess we know who this is going to. This is going to the chairman for this session, Mr. William Coker. And we ask Mr. Edward Che to do a presentation for us. The third one. This is an appreciation of your brilliant and thought-provoking discussion of the paper presented on the topic, Transforming the General Insurance Industry through Self-Regulation and Financial Capacity at the first National General Insurance Conference. And this one is going to Mr. Gustav Sele. And we ask Mr. Kwame Fore to do the presentation for us. The final one, this is an appreciation of your brilliant and thought-provoking discussion on the paper presented on the topic, Transforming the General Insurance Industry through Self-Regulation and Financial Capacity at the first National General Insurance Conference 2017. And this one is going to Mr. Michael Kofi Ando. And we ask Mr. Nathan Edu to do the presentation for us. Thank you very much. Vocal Intense Choral, give us a very short piece, then we'll move into the final session. much, Vocal Essence Kura. Please put our hands together for them, and they put our hands together for them. They quickly move us into our final session, which is on the theme transforming the general insurance industry through business innovation. And the chairman for this session holds an MBA in Finance and Statistics and a Bachelor of Arts in Business Administration, both from the University of Chicago and in the United States of America. He became an associate of the Society of Actuaries and a member of the American Academy of Actuaries, and awarded distinguished enrolled in 1983, 1987, and 1990 respectively. He is currently the Executive Director of All Star Insurance Brokers, Ghana Limited. Prior to that, he held a key position in several organizations within the financial and educational sector, both locally and internationally. Ladies and gentlemen, please let's welcome our chairman for this session, Mr. Peter Osei-Dua. Like the first one, we're also going to have two discussants for this particular session. The first one, he is currently the Chief Executive Officer of Vanguard Assurance Company Limited. Prior to his appointment in August 2009, he was the Acting Chief Executive Officer and Chief Operations Officer from December 2008 to July 2009, and October 2005 to November 2008 respectively. He was also the head of technical operations at the National Insurance Commission from June 2003 to October 2005, and a senior marketing manager at Ghana Reinsurance Company Limited from January 1992 to June 2003. Ladies and gentlemen, our first discussant, Mr. Dr. Gideon Amanyeudo. Let's put our hands together for him, please. Our final discussant, she is passionate about helping brands and business leverage social media and for its growth. She consults, trains, speaks, and also writes on topical issues relating to digital marketing and internet productivity. In line with her passion, she writes a weekly self-help column in the Business and Financial Times and runs the digitalnuggets.blog. She has experience in training in public relations, management, communications, and marketing. She also runs Nobles Montessori's, a world-class early education center located close to the Atomic Roundabout. Ladies and gentlemen, please let's welcome Esther Nyadie. Esther Nyadie. Let's put our hands together for her, please.
Good afternoon, ladies and gentlemen. All protocols observed. I hear that we don't have too much time left. Because of that, the discussants are now going to be given 10 minutes each instead of the 20 minutes that the other discussants have. I'm sure some of you are glad to hear that, because I see a few people kind of beginning to drift away a little bit. I'm very confident that with these two people we have here, they will still do justice to the topic in the 10 minutes that have been allowed for them. Because of that, I'm not going to talk too much until after we hear from these discussants. So I'll first of all hand the mic over to Dr. Amanyeudo to give his presentation. Let's give him a round of applause.
Thank you very much, Mr. Chairman. Mr. Chairman, all protocols observed. My presentation will just be very simple because I have only 10 minutes. I'll just pick the highlights of the wonderful presentation given by the guest speaker, Then I'll make some few observations, trying to relate it to the market, and finally talk about the lessons for the market. We've had a very wonderful presentation on the digital age technology, which involves use of phones, smartphones, has always been reversed, wireless technology, and we also talk so much about the robots, use of database, and also the internet. These things are all meant to revolutionize insurance. And as it sounded, you either join the change or the change will kill you. Now, digital technology is everywhere. Every business that you look at, restaurant, whatever, in the family, etc., is being used. So the insurance industry cannot be left out. And that's the way to go. An example is given of this great company in the US, Lemonade, which really has embraced this technology and delivering insurance and processing claims through this media. And according to the speaker, about 90% are what? First-time users, which shows that it's very, very successful. It has actually transformed the insurance industry all over. He also talked about one particular thing, that is partnership. The thing is that using technology, the insurance company, you don't have to now go and be doing everything you want to do. You just have to partner with somebody who has a competitive advantage. And there you are delivering. We have telcos around. You can partner with them and make sure that you make use of it instead of you trying to expand to those areas. Because you can only do one thing and do it very well. You cannot be a jack of all trades. You'll be a master of none. So he talks so much about strategic partnership. Now let's come back my observation on the market. It's not like the market, there's no hope. We are doing so well. There's one or two things all over. But when we go back again, what is all this business innovation? Is it just something in the air? What should it be driven by? Like the speaker says, the customer is the focus. And the question is that what does the customer want? He wants policies, issues, and claim pays speedily and accurately. And in the market here, brokers do complain how at times policies are not accurate. They get to the customer and there are mistakes. They want these things done accurately and it should be done speedily. You want to pay claim, the person is suffering and it takes you about 3 months to bring the claim. That's not speedily. So the customer, that's what he wants. And now with the digital age, he wants it to be very convenient. He wants to use his mobile phone and be able to complete claims and send requests without having to move through the traffic. The insured also is looking for, as far as insurance is concerned, if let's say he's paying money all the time and there's no claim, should he just continue to be paying insurance premium? He wants some reward. So what are we doing? And also he wants some personal relationship. So the use of data, as he talks about, database, knowing the bio data of the client becomes very important. Then you can form the bond. You don't wait until renewal before you come. The person's birthday, you send some notes, etc., congratulating him on his wedding anniversary. And that's all that he talked about. Now let's look at what is happening in the market. The market is doing well, it's not bad. You see a lot of companies coming up with innovation driven by the customer needs. Let me start from my own company, Vanguard Assurance. We've just introduced a card which makes, instead of using the A4 sheet for as a certificate, you have a nice card which looks like an ATM. Excellent. You go to Quality Insurance, they've introduced, when you have an accident, there's a courtesy card for you, which is called Kili Quili. Excellent. Now, enterprise insurance for a long time has been sharing profit. You're making claims, but not too much. You have some profit sharing. Excellent. Ghana Union have started rewarding people with some voucher, showing that if you really actually are insuring, there's something that you are getting. So we are really addressing it. But the question is that, and a lot of companies are now embracing the use of mobile phone. Star Assurance is there, Enterprise, Vanguard, and a whole lot of others that I cannot mention. But the question is that we are talking about business being transformed through innovation. Is it transformational? Is it like the company talks about? The question is no. We are moving slowly, step by step. But it's no longer time for that slow by step. Why are we doing that? Because we are not forming partnership. We want to do everything ourselves. So the question is that are we really going there or waiting for somebody, a banks or some giants to take over us? I think we need to wake up. Now the question, what is the lesson for the market? The technology is here. Digital technology is here. And it's good, it's efficient, it's so simple. And we just have to embrace it. And embracing it what do you have to do? You must form partnerships. And when you form the partnership, you must focus on the customer. Insurance is promise to pay claim. You must always remember that. It's not a paper policy that guy is looking for. That's what's important. How is the claim processing itself finally? We are looking at only bringing out all the examples I've given are fine. But what are our processes? Most of the software that we use are not making business convenient. There are a lot of breakdowns. It's not accurate. So we need to look at the process. A lot about products. Yes, the life insurance industry are coming with products. But I think the answer now is not only product. The core of our product is promise to pay claims. How is that claim process being done? We need to look at that and make it transformational. If we do it, then we will be changing the game. And then we will be talking about game changer. Just about 3 days ago, I like a video play. My vice chairman traveled and came back. And these are wonderful things that people are doing. I just paused for the video to be played and I'll make the comment.
Construction, that's all. No, I'm not driving. No, it's just construction, that's all. No, I'm not driving. Are you okay? Yeah, you? I'm good. Oh, no, not you. Listen, I'm gonna have to call my agent. I'm gonna get right back to you.
Mr. Burton, this is InsureCorp. We've received sensor data. It indicates you were in an accident. Are you injured in any way?
I'm not injured, no.
Is anyone else injured?
I don't believe so.
Okay, where's my agent's number?
We have pinpointed your location and we are showing your car is not drivable. So we are dispatching an Uber car to take you to your destination.
That will be great.
I'm pressing 1. English. E-N-G-L-I, English.
May we give your coordinates to our appraiser drone to perform the appraisal?
Absolutely.
We have received the photos, assessed the damage, authorized the repair, selected a qualified repair facility, and have dispatched a tow truck to take your vehicle to that facility.
Perfect.
Yes, hi, this is... Yes. Oh.
We have looked up the other vehicle's insurance, transmitted the appropriate data to create the claim, and filed the California SR1 accident report. Can you confirm the information is correct on your phone, then hit the accept button?
I'll check it right now. Okay, all done?
Thank you. Your Uber car is arriving now.
I see it coming.
Accident, not payment. Accident.
Your tow truck should be there now. Don't forget to leave your keys in the vehicle. Thank you for using InsureCorp, powered by Pivotal Labs.
Wow, this is insurance. Promise to pay claim. Properly delivered through process and digital age. And this is what we are calling for. Thank you very much.
Thank you very much, Doc. Need I say anything? I shouldn't say anything. I think, that little clip said it all. We all want service, and I hope that now that Vanguard has opened our eyes to this, they will be the first company to actually have this happen here. Let's go to our next speaker. Our dear lady Esther, and Esther Nyade. Can you please give us your presentation, please?
Good afternoon, ladies and gentlemen, all protocols observed. The speakers ahead of me have already talked about the digital world and how it is disrupting insurance. I would like to go with seeing what is happening as an opportunity and not as a threat, because we can sit down and cry over what is happening and what is not happening. But if we embrace the change that is coming, we can be able to do more. So the new technology has given the customer more power to the customer, but at the same time, it is giving insurance companies opportunities, and it is reducing costs too for us. So we are in a digital world. We have to accept that, and we have to change our approach. Now, the speakers before me have spoken about lemonade, and when the first speaker spoke, I googled it and I found out they paid a claim within 3 seconds. Somebody lost a coat and they did it within 3 seconds. So that is how the world is moving. And the customer today is empowered, as the first speaker said, and he has access to information. So if Lemonade has been able to do this, why should I stick with this insurance company, which would take me maybe 1,000 years to get my claim and all that? If somebody is doing something better, or somebody is giving me something worse, I have the power to undo, in quotes, that company, because I can go on social media or somewhere and start something and everybody will join in. We heard what happened to Mawako. People joined in and it was all over the place. And so the customer today has the power to do and undo. And then the customer too has direct access to your brand, your company. How are you making use of that? Maybe in 10 years prior to this digital age, you would have to place a phone call and somebody had to be in the office to respond. Now somebody gets on Twitter, and if the business has a Twitter account, the person leaves a comment or something, a request, and the person expects you to respond to it now. My husband says that if you call Vodafone 100, it takes a long time, but put that message on Twitter and they are fast to respond to you because people are watching them. So that is the customer today. And then we are in a world where mobile is ruling, mobile is reigning, and people are spending more time on their phones, as we heard. The internet too in Africa is mobile because most people don't have access to PCs. A lot of people are on their phones to get access to the internet. So we have to look at ways in which we can also be mobile. We can move with people. The first speaker said, you grab your phone the first time you wake up. But sometimes our phones even wake us up. They have replaced alarm clocks. So the phone is playing so much, a bigger role in our lives than any other technological gadgets so far. Customers too now expect better experiences from us. So you have a Facebook page, you put pictures there and you leave it to rot, but your customer comes there and expects to get an experience from you, a better experience from you. And then people are connected to different devices. So if you take WhatsApp, for instance, if you are here now, you are on it chatting with somebody. When you get to the office and you want to move to your laptop or your desktop, you just go to WhatsApp web and then you continue your conversation. So people expect that seamless flow in everything. We are getting used to that. At first it was fast food babies. Now we are mobile and seamless babies. For those who are Ghanaians, somebody told me he's a Gold Coaster. So for the Ghanaians. We are also in a data-driven world. There's so much information about people on social media, on so many platforms, so much information. And companies are leveraging on that. So if you go online and you want to register for something, now there are options. Should we use your Facebook account, or you want to type in your email address? It makes it simpler. You don't have to go in and key in your name, your age, your date of birth, and all that. Things are being made simple because there's data available. The question is, how do we use the data at our disposal? Telcos are taking advantage. Now telcos are giving insurance on mobile. I know of Tigo Mobile and Tigo Insurance and Airtel Insurance on the mobile phone. So how can insurance companies make use of these innovative technologies which are available? There's the Internet of Things, as the first speaker said, cars which are being driven by themselves, smart applications in our homes, things that can detect what you do, like they watch you. And let me use Uber for example. You sit in Uber, go to this place for the first time, the second time, it will ask you whether to save that location, and then it's saved. So the next time you want to go, you don't have to type in blah 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 blah. You just select that location and it takes you there. So as our phones are becoming smarter, if you go somewhere, for those on Samsung phones, your Google Map can tell you it will take you 15 minutes to go to your workplace because it has taken notes that this is where you go, 15 minutes to get here. So all these data are at our disposal, but how are we going to leverage them? We have algorithms on social media like Facebook, and Facebook shows you information based on your attitude on Facebook. It doesn't show you everything your friend has posted or the companies you follow posted. It shows you based on things you liked and all that. So how can we leverage these technologies for good? For the empowered customer, we have to make information readily available. Available on our social networks, available on our websites, available on our mobile apps. We also have to use these platforms to gather feedback. When we came, there was a poll going on via SMS. It was feedback that was being gathered. So how can we do more of this to get feedback from the people we are serving so that we better improve the services we are offering to them? Then we can make people advocates. People are on social media, our workers are on social media for the CEOs. How can we use those spaces, that real estate, to get more attention, more eyeballs on what we do? I heard the insurance penetration rate is as low as 3% in Ghana, and we need to educate more people. So how do we use that army, our customers, our internal customers and our external customers, to educate more people about the need for insurance? And then we have to be customer-centric. If you have touch points on the digital line, you have to make sure that there are people there to respond to what you have. Talking about the mobile experience, there's something called sponsored data. I don't know if we have come across it. Sponsored data is like making your applications free. So if a company like Ghana Union Assurance has a mobile app, you can make it in such a way that people who download the app are not being, credit is not deducted for them downloading the app and for them using the app. So that makes people more interested in using your products, your mobile products. And then if you have a mobile website, you have to make sure that people can easily take action on the website. You want people to take action. It's not like, come and view my website. When you finish, get up and go to the next office, the nearest office next to you, and do A, B, C, D. People should be able to take action on your mobile website. And even if they can't take action, you should be able to gather some information from them which you can follow up on. And every company needs a mobile website now because people are using the internet on mobile. So we need to be mobile. That is very important. And then the important information should be readily available on your mobile website. People don't have to scroll and search and zoom and pinch before they find what they want. It should be there. And then your contact too should be made easy. People should be able to contact you easily. And your website should be light and easy to load. Shouldn't take 1,000 years for me to be able to load. I'll go to the next person. Maybe I don't really know what you have, which is different from the next insurance company. So we have to take note of these things when we are working with our IT people to design our website. In order for us to remain relevant in the world of academia, they say publish or perish. Today I heard, change or die. I don't think anybody wants to die. So we have to change. We have to take note of these things which are happening around us and change, adapt. If we are not a technical organization, how can we poach some technical people? I was reading about an InsurTech where it's an insurance company. They've gone for 2 IT guys. And the IT people don't really understand insurance. So they know how to come up with applications. And the insurance people are there. So they bring their ideas together and they create applications which are suitable for the customer. So we have to look at all these things when we are thinking about not dying, about surviving in this era. And we also have to invest in training our staff. One staff member handling all the social media for a very big organization can be overwhelming. What if all the 20 staff members you have are in on what you are doing in the digital space? So let's say you put up a post on Facebook and everybody shares what you have put up. That goes across, it touches more people more than just one person sitting in one corner and doing something. Oh, I said one corner. Now, WhatsApp yesterday came up with this application where you can tell people your actual location. You can send the location. And I foresee the jealous wives and husbands. Where are you? Oh, I'm in the office. Send me your location. But we can look at all these things and see how we can go around some of these things like fraud. And WhatsApp for Business is coming. WhatsApp is developing WhatsApp Business. So very soon we would have WhatsApp Business to add to all the social media channels which are already available for businesses. So we have to invest in training our staff to be ready for some of these things. And my last but one point. We have to make a budget. Social is very, very important. Digital is important. Let's include it in our budget. Gone are the days where GTV was the only TV station, where you could go and have your adverts before Obra. You know, about 80% of Ghanaians are going to watch Obra. So when you get it there, you get to all news within the news. There's so much fragmentation in that space. So let's commit some of our budget to the digital world, to exploring applications, how we can be more relevant in the digital space. And the last thing I want to say is that we have to embrace the disruption that has come. Thank you.
Thank you very much, Auntie Esther. Like some, Doctor did talk about a couple of things. He did indicate that we need to embrace this digital age, or I want to hear from you. Embrace or die. And as Esther said, don't want to die. And therefore, we need to embrace this age. It shouldn't be a threat to us. It should rather be something that we take and build on. I like the fact that Dr. also emphasized the need for cooperation. We see all these new tech companies coming out with all kinds of applications that seem treacherous. We don't need to reinvent the wheel. As he said, these telephones are very, very much willing to work with the insurance companies in order to leverage on what they already have. And therefore, we need to think in those directions. In other words, partner with those who have the technology and don't be afraid of the competition that they are bringing. As we're also doing this, something just occurred to me that we have insurance brokers amongst us. And insurance brokers, anytime they see insurance companies get opportunities to get straight to customers, they panic. I'm an insurance broker, so I know what I'm talking about. The fact of the matter is that insurance companies have had, previously have had a very, very hard time trying to get direct access to their customers. And the reason is that who brings them the customers? It's either an agent or a broker. And so they never really had the opportunity to get direct access. Now with technology, they can. They send text messages, customers can go on their website and all of that. But brokers do not, don't panic. Because the customers that you have, especially the business customers, still need your advice and your expertise in getting the right type of coverage and so on and so forth. And so we don't need necessarily to panic. And one of the other things I would also like to bring to our attention is that when we talk about a lot about innovation, a lot of the kind of things that insurance companies do actually improve the processes that they currently have. But that is not innovation. Innovation is something that changes the way you are doing things, not to improve what you are doing. And that's the reason why the first week I talked about things that will shape the industry. And so we need to start encouraging in our own companies the need for innovation, doing things differently so that we can change things. How do we do that? I know some companies, including the one that we used to have some time, that introduced suggestion boxes. The people who work on the job, because of their experience, will come up with ways to do things that might be very different. We need to encourage that. Apart from encouraging that, we need to also find ways and means to act upon these suggestions and find ways and means to implement them, and people who need to be compensated for these kind of interventions. Time is gone. I would not like to waste too much of my time. We want to again thank Dr. Amendo for his presentation. Big applause for Dr. I believe the video he showed us is something that we all go and think about and find ways and means to get to something. We might not get exactly to that stage, but we would like to get something like that. I also like to thank Tessa for her brilliant presentation, and Tessa, thank you so very much. And thank all of you for showing up here today. We hope that you learn something today, and that going forward, we should not take the status quo as what I call all set back. We need to find ways and means to do things. Thank you so much. Thank you. Yeah, I just reminded that we need to give opportunity to people to ask questions. So, because time is long, we will take 3 questions. 3 questions. So, we want to get the first one. Who is going to ask the first question? First, say your name, the company you work for, and then the question. Any questions? It shows that everybody is angry. Yeah. Everybody is angry. One, any questions? Yes, sir. Please, there's a mic in the middle.
My name is Ino Aqua from Alliance Insurance. One big problem we have in our market is the appetite of the customers to pay very low price. And from the video we watched, you could see that there was very high quality customer service delivery, and that doesn't come cheap. So to be able to offer such level of customer service, how are we going to go forward with it? Mr. Lee, the fact that customers are not ready to pay high prices. Thank you.
We can take all of them then.
Right. All right. The next question, please. Okay, let's make it. You want to take it?
Thank you very much for that question. The first speaker previously spoke about giving an example of a US-based company, and you can see that the technology, when you university has technology, what it also does is that it reduces staff costs. So when you see just about 10% of their staff to produce all those things. And moving US too far, let's just come to South Africa. I saw a company in South Africa called King Price. They are doing exactly that. And they have very, very few staff. As a result, overhead is down. See, when you invest, you cannot invest in technology and also have same overhead in terms of staff costs as you have. In that case, you will not benefit. Because the thing is that if we don't do innovation, for instance, like, let's take for instance, what enterprise introduced in the market of South profit sharing. Or before then, they were charging a price for paying claims faster within 2-3 days. That is the reason because of the price that they have increased, But when they changed the second one, profit sharing, it was done at the same level, the same price, period. It catch up. So what you have to do is that this innovation must also be in a such mindset that price is either just minimal, something very small, or the same. It means, therefore, that you look at the first topic that the first thing that the speaker talks about, positioning. It's not that every company who has to invest heavily and be the first to win. You can just win, let somebody start at least spend the money and you copy. So you need to reposition yourself. And copying actually is not bad. I see a lot of people laughing. But see, somebody can start and then you can't second copy, change his life. I remember very well when the chairman was the MD of SIC. There's something that we done first, heavily invested in. But when we sit back to what they done,
we read policies like this spend a lot of money, and we are accountable to that area. So cost must be important. The customer is don't pass by fighting and it's stable.
What I like to add is this. With such specialized service and all that, what one can do is to customize the service. If you have a motor insurance policy that gives the normal benefits, and you have one with the bells and whistles that costs a little bit extra, people will then have a choice to pay more for the customized service. If you do that, you will still get your normal what I call customer base, and then you might build an elite group of customers who might want to pay for more, and that way you would still be able to, to satisfy all your customers. I think that I would suggest that would be a way to go. I still will give a chance for one more question before we do. One more. Yes, sir. Please.
Yeah. Mr. Chairman, my name is Felix Adani, Danwall Insurance Company Limited. My question is simple. Since this is the first National General Insurance Conference, I remember Ghana Insurance organized an award, which I remember some stage a walkout way back, I think if I'm right, 2008 thereabout. My question is this: when will the next Ghana Insurance Award be held? Because I've lived to see the bankers doing it, the advertising companies doing it, but the insurance companies are still silent on that. Thank you.
Yeah, I think I'll let the president of the GIA answer this question. I think she's the right person to do so. And Deborah.
Yeah, you can take mine.
Thank you, Mr. Chairman. Thank you. In terms of awards, as you said rightly, the attempt was pretty poor. We've learned lessons from that. I know that there's a collaboration between us and the NIC and the DFT. We are yet to engage members because we need the members' buy-in for it to be successful. I think in terms of timelines, we tabled 2018 as a possible first one. So it's very much in the pipeline. Thank you.
Thank you very much. Thank you very much, Madam President. I believe Esther wanted to have a comment on the earlier question, so we'll give Esther a chance to add to that. Thanks.
Okay. What I would like to add is that social media and the digital world gives you the opportunity to show the customer experience, like what you can experience when you buy into what I'm selling to you. So we just watch this video. If I have the means, I would like this type of insurance. When somebody hits your car, I go through all that. It's not stressful. The other guy was dialing the health center and he was stressed out and all that. So you can go with educating people. People have to see what they are going to get. If you are able to do that, if you are able to connect with the customer on that level, then you have the customer, you have sold to the customer.
Thank you very much. That should end this session. Again, thank you all very much for coming. Thanks a lot.
I'm seeing a hand somewhere there at the back. Okay, yeah.
We'll still give a chance to the last question. This is the last question. Last question.
Thank you, Mr. Chairman. My name is Justice Amwanyapo. And my question has to do with the fact that industry has traveled ages of the Stone Age,
the industrial age, the revolution age, automation age, and all the ages. Today, digital age and innovation has come to live with us. Now, the issue is, regarding insurance, do you want to leave the draft of digital revolution in the hands of legal regulation or self-regulation? For me, it's an issue we need to consider. And it's a forum you may have to look at and see where we want to move from here. Thank you.
So that was just a comment, not necessarily a question. So that will be taken up at a later date. Again, Mr. MC,
right.
It's all up.
All right, thank you very much. And please let's put our hands together for them. We have a citation for all of them, and this one first goes to Mr. Peter Osei-Dua. This is in appreciation of the brilliant and able manner you chaired the second session on the topic transforming the general insurance industry through self-regulation and financial capacity at the first National General Insurance Conference 2017. And to help us with this presentation, Mrs. Esther Osei-Dua, please help us with the presentation. This is an appreciation of your brilliant and thought-provoking discussion of the paper presented on the topic, Technology and Innovation at the Service of the Life Insurance at the first National General Insurance Conference. And this is going out to you, Dr. Gideon Amanyeudo. And to help us with the presentation, Mr. Oforikwe, please help us with this presentation. Then the final one. This is an appreciation of your brilliant and thought-provoking discussion of the paper presented on the topic Technology and Innovation at the Service of the Life Insurance at the first National General Insurance Conference 2017. And this is going to Ms. Esther Nyadie. And to help us with the presentation, Reverend Hammond, please help us with the presentation. Reverend Hammond. All right, thank you very much. And we can once again put our hands together for them. There are 4 more points for us to finish up that we can wrap up. And we hope to do this within roughly 5-6 minutes. The first one will be the highlight of the conference. So we'll have Mr. Kwame Ofori, who is the second Vice President and Chair of the General Insurance Council, Executive Director, Enterprise Insurance Company Limited, to join us for the highlights of the conference. The second one, after his presentation, will be the vote of thanks, then the closing prayer, then we can eat, then we'll say goodbye. First, highlights for the conference.
Hello. We've had a wonderful event. The highlights won't come on. Don't be highlights. I'll only say a few words because we all want to go and eat. We're hungry. Okay. What I'll say first is that we all know, we all talk about self-regulation, and we know that for self-regulation to happen, there should be a structural change in the at the GIA. If GIA want to own the self-regulatory thing, it means clearly that there should be some changes that we do, and we also make sure that we learn from the countries that have reached a high sense of self-regulation. So we're going to learn from Kenya and maybe South Africa, so that we can actually or also implement self-regulation in terms of GIA. In the case of business innovation, one thing I've realized is that, the companies have got a lot of innovation. Since I came to this industry, there have been a lot of innovative ideas. However, none of them has had a big bang effect. So we have innovations, but I'm sure that one day, one company will have something that would sell so much and everybody will copy it. So the various innovations, the various innovations that we brought, we haven't seen any wild effect. And I'm sure it's the reason why people are not copying. Because if somebody has brought something good and all the customers are going to that company, I'm very sure that we will all learn and change our ways fast. Okay, so we're waiting for the company that will bring the big bang effect. and for financial capacity, we all know we need financial capacity to retain more of the business we write, and also to be able to pay claims when they okay. So I'm not going to say much. There's a lot of job that the industry has to do. I mean, the association has to do, and we go back to the drawing board to make sure that we start the self-regulation, and we would also ask the NIC to back us on that. So thank you so much.
We'll go for our vote of thanks, and Nicolina will join me here for the vote of thanks. Please put your hands together for her.
Thank you, Judge. Thank you, MC. I know we're all tired and we want to run away quickly, but as protocol demands, if you invite somebody to an event, you need to say thank you to them. So we want to say thanks to God Almighty for giving us a good day. The privilege is mine this afternoon to see that this project that we embarked on last year has seen a successful end. Here, we want to thank the chairman, Nana Asariakufo, for coming to grace the occasion. We also want to thank the rep from the ministry. We thank the Commissioner of Insurance for spending time with us during the opening ceremony. We also want to thank the President of the GIA, our beautiful President. She walked us through the program step by step. It was challenging, but I think that successfully we have brought this event to a good end. I also would want to thank here all the discussants and their chairpersons. We have Mr. Coker. Thank you very much, sir, for gracing. Mr. Peter Dua, we are very grateful. We want to thank the discussants. We have here with us, Esther had to come in to take the place of the executive chair or executive director of the CIMG. Esther, we are very grateful for you making time on such a short notice. Dr. Gideon, please see if I don't pronounce the surname very well. Amenyedo. Very insightful. I like the video clip. And in fact, as soon as you introduce, since you are a big brother, I'm following from my company, who also introduced it. Thank you very much for that insightful thoughts. We also want to thank the other discussants. I see them, they ran away. They're still here. But we thank them very immensely for coming to grace the occasion for us. We also want to thank the first vice and the second vice of the GIA. Mr. Kwame, for yourself, you've been seated throughout. We are very grateful for direction and for support to ensure that this conference come to a successful fruition. We cannot go without thanking the main speaker. I know he had to run away for something, but I have personally told him since yesterday, when I started going through his slides, that this is very thought-provoking, and it's going to leave
a lot of thinking for us in this industry to ensure that we leapfrog, we run faster, and get to where we will be, in all with a quest to satisfying our customer, which is the ultimate. Our promise of insurance is to pay claims, and as we use technology and self-regulate, we will be more than willing to do some of these things. So I believe that our minds have been tickled by all the presenters. I want to thank all the CEOs gathered here. We want to thank our sponsors, as you can see. We want to thank all delegates. I believe you've done extremely well. Please clap for yourself. We also want to thank the choir for coming to give us that soothing songs. I believe they've done well too. You can do a clap for them. The media has done well from morning to now, and we are streaming live on Facebook. You can go back to watch again and then address yourself with some of the things that has been said. To the committee that makes sure today is successful. On behalf of the president of the GIA, we say a big thank you. To everybody that has made the time to be here, we say God richly bless you. Thank you very much.
And please put your hands together for yourselves. You've done a marvelous job here. Thank you very much. And one other thing that we have to say, we've been seated for long, and some of us are hungry. So we thank the chef who prepared the food that we're going to take the lunch. So we also give thanks to him. I just read something somewhere that insurance is like needing a parachute. If it is not there the first time you chance on it, that means that you're not going to need it again. If it's not there the first time that you really need it, that means you're not going to need it again. That means you're not going to be available to need it again. So let's see how best we can all work together to ensure that we can keep this running and keep it running in this country. Once again, put your hands together for yourself. We'll go for the closing prayer. Reverend Hammond, please join us here for the closing prayer, then we can wrap up.
Please let us be upstanding for a closing prayer. Let us pray. So, Father, we want to thank you once again. We thank you that we've been able to go through today's program successfully. We invited you to come and sit with us, and you have done so. As we disperse from here, we do not do that without you. Go with us to our various destinations. Whatever we needed to have done before coming, and because of this we could not do, we pray that you give us the grace to do all. We also want to commit the meals we're going to take until you ask that you sanctify it, so that when we eat, we will have that strength to go on. We thank you for all the deliberations that we have discussed and has gone on here. It's our prayer that, Lord, we will see a new era in our industry. We will have a better penetration in our economy. Businesses will boom and grow to your glory, and we'll all be happy with whatever we are doing. We thank you so much for hearing and accepting our prayer. In Jesus' name. Now to the Lord's gracious hands, I commit you. The Lord bless you. The Lord keep you. The Lord make his face shine upon you and be gracious unto you. The Holy God leave the light of his countenance upon you and give you peace. And may the blessed Almighty God, Father, Son, and Holy Spirit be with you and remain with you even now and forevermore. Amen. Thank you.
Thank you very much. And for the lunch, the CEOs, the discussants, and also our chairpersons, you go to the restaurant upstairs for the lunch. For the delegates, kindly pick a coupon on your way out. The same entrance you use for the coffee break. You get a coupon, you sit by your table, and you'll be taken care of. My name is John Sabo. Thank you very much, and hope to meet you again next year. Bye-bye.